All right. Today, bank trade alerts hit another brand new all-time high. And do not forget the bank Black Friday deal is currently going on where you can get 50% off your first month. Simply apply the coupon code Black Friday, all one word, no spaces, and you can get 50% off your first month of bank trade alerts. We are absolutely crushing this market, and we would love to have you come crush the market with us. All right, today SPY was down 0.22%, and yesterday we got very close to closing that gap at 455, and it's still possible that is where SPY is trying to go. But whether or not we fill that gap, we are now getting very overdue for this pullback, and this pullback is very likely going to take us back down towards 440, down to about 436, and I do believe that's going to be happening very soon. So whether or not we've already started the pullback or we're going a bit higher first is irrelevant. What I want you to be aware of is very soon, if you start to see price action breaking this very vertical support trend line, then we are very likely going to start seeing selling that's going to take us back down to retest this breakout. Now, I think sentiment is shifting very quickly because down here around SPY 410, there was a lot of people who thought it was absolutely ridiculous that I was saying this could have just been a correction within a bull market. And now that we're getting this very vertical rally, we're getting a lot of people coming out of the woodworks who think there's no way we're ever going to pull back again. Don't be surprised by that. The majority do get the market wrong over and over, and that's why a lot of people that were unwilling to buy down here are now trying to chase and buy way up here because they simply don't have a plan. Do not be one of those people. Go have a plan and make sure you know exactly what you're going to do if we continue higher with no pullback before the pullback, or if we start to see impulsive selling and pullback immediately. No matter what happens, you should have a plan where you're going to be prepared for it and you know exactly which levels to react from. So on SPY above 451, it's possible to go fill that gap at 455. And then if we continue higher, we're looking for a retest of that previous high back there in July, right around 458 and then 460. If we start to pull back and we lose support at 451, then we're likely going straight down towards 441 to 440 and then 436. So be prepared and let the price action do all the talking and make sure you're prepared for either scenario. On the NASDAQ 100 triple Qs, we were down 0.58% today, and we're getting very close to that next price target at 393 now that we're getting the higher high breakout above 388. However, just like SPY, this is a very vertical rally that eventually is going to need a pullback, and that pullback is likely starting very soon, just like SPY. And in the triple Qs, that pullback is very likely going to take us down towards 378 to fill this gap. Now, if we continue lower and we slice right down through that gap fill like it's not even a support level, then we're coming all the way back down to retest the breakout here at 370. Now, in the short term, that's going to require a break of this support zone at 383. So watch that support level. And if we break 383, then you're looking for the gap fill at 378. If we continue higher, look for 393. And then above that, we have the previous all-time high resistance zone around 404. On the Dow Jones, we were down 0.2% today, and the Dow Jones is starting to break that resistance at 350. So above 350, it's possible we go to 353 and then 356. If we can't hold this breakout at 350, then we're likely coming down towards support at 345 and the gap fill at 344. And if that support fails, then we go lower towards 341 and then a gap fill at 338. So be prepared whether we go higher or lower, knowing that we need to hold this level of support at 350 if we're going to continue this very vertical rally. On the Russell 2000 IWM ETF, we were down 1.29% today, and the small caps are behaving more technically sound because we did get that higher low pullback and then the higher high breakout. And then when we broke the downtrending resistance trend line, we're spending plenty of time in consolidating around this zone. So what that means is that it's going to be possible the small caps rocket out of here towards 186 to 190 as long as we can hold above this support around 174 to 176. If we can't hold that support, then we come back down towards these gap fills and continue this bear trend, which is going to take us down towards 170 and 165. So watch that zone between 174 and 176, and that's going to tell you whether or not we're going towards 190 or down here towards 170 and 165. On the ARKK ETF, we were down 2.25% today, and it looked like we were trying to break that critical resistance right around 44.5, but we got rejected from that, but we're still above the support at 43. This is a higher low, higher high, just like the small cap, so you can stay bullish above 41, but a much better risk level at this point would be using 43, and if we break 43, then we likely lose this support trend line and come back down towards 41 and a gap fill at 40. On the VIX, we were down 0.6% today, and the VIX is getting very close to the bottom of this range, which is down here right around 13, and if you look look in the rearview mirror, that's where we've been getting the pullbacks and the spike in volatility. So I still think there's a very good chance the VIX is going to spike up very soon. So watch the VIX right around the support zone at 13, and if we start to get a higher low pullback, we could easily see the VIX spiking up between 16 and 18. On Bitcoin, we're currently down about 2.5%, and Bitcoin is building out a wedge, which is a triangle shape of consolidation between this resistance up here at 38,000 and this support around 35,000. If we lose this support, this is going to look like a double or triple top that's going to take us back down towards the retest of the breakout at 32,000. And if we break out above the wedge and above resistance, then we go to the next price target higher at 40,000. On Tesla stock, we were up 2.38% today, and Tesla is bouncing off of the retest of this support at 230. So the next step for the bulls is to break this resistance at 244, and then we can start pushing higher towards 255 to 263. If at any point we get rejected from resistance, look for this to be a double top rejection that's easily going to take us down to fill the gap at 225, and then a retest of support at 214 to 208. On Apple stock, we were down 0.42% today, and I still think Apple is very close to a pullback from this resistance zone to take us back down towards this gap fill at 186. If we continue higher, then we're looking for resistance at 194 and 197. So jumping back over to the S&P 500, we're getting very close to the upper gap on SPY at 455, and then after that gap fills, we only have gaps to fill to the downside, so I think we're very close to getting a pullback. Remember, a pullback is not a bearish thing. We need it to confirm a bull trend, and if we get a higher low pullback into a higher high, that is going to likely confirm the S&P 500 is trying to break out to a brand new all-time high, or at least at a minimum retest the previous all-time high. So follow the price action and let it do all the talking, and all you need to do is have a trade plan prepared for either scenario and then react to the price action as you're seeing the price action unfolding. That should be telling you which trades you should be placing. We're absolutely crushing this market on bank trade alerts, and there is the Black Friday sale, which you can currently take advantage of, and you can find all of those details in the introduction of this video or in the description below. There's also currently Black Friday sales on TrendSpider and TradingView, so you can take advantage of those deals as well, and you can find all of those links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.